All right, now let's kick off the hour by checking in on what investors have been up to this week. Maybe not a surprise, it's all about banks and commodities. For more detail, we're now joined by Gemma Dale from nabtrade. G'day Gemma, how are you?
I'm well, how are you?
Very, very well. Thank you for joining us. I said it's been all about banks and commodities. I assume we're going to see some of the big four, at least a couple of the big miners and some of the top trades on nabtrade this week.
Yeah, you stole my thunder completely, which is very upsetting.
Sorry. Rewind, pretend I didn't say anything. Gemma, what's been happening this week?
What's been happening? Yeah, no, I'll tell you about what's been happening. It's
Please
fascinating.
do. Right.
Banks.
No.
Amazing.
Wow.
And mining companies. Our analysts a while back, it was always miners and milk.
Okay.
When things kind of fell away, it was always miners and milk. Now it's banks and miners.
Okay.
It's always going to be miners.
Miners and money.
something.
Can we do that? The two M's work out that way?
Yeah,
You should take that back to the office. There you go. There you go.
No,
so what's happening there from a retail trader's perspective? Is it always banks just so big, or is there a trade on? Are we seeing more activity in the buying and selling space? What's driving that interest at the moment?
Yeah, it's such a good question. So it is always banks. They are such a meaningful part of the average retail investor's portfolio.
Right.
I mean, at one point they were like 35-40% of the average portfolio. It was absolutely astonishing how huge the holdings were. They've obviously fallen away, but a big chunk of that is the fact that prices have fallen, right, over the last 5 to 10 years.
Yeah, right.
For NAB holders, for many others, you've actually seen a downward trend over that period. And many of our holders have had them for at least that long, unless you had CBA, and a lot of our guys don't. It just felt expensive for them, but that was not a great trade. Not holding CBA really cost them, and then they were like, well, what do I do with the rest? I'm just going to hang on to them for the dividend. But we did see enormous buying, like massive buying of banks in COVID. So when everything fell off a cliff, all of the big four were in the top 5.
Makes sense.
Most bought. People love them.
Flight to safety type stuff.
Also just cheap,
Yeah.
you know, $14, $15 for 3 of the big 4. Why wouldn't you, right? They were all over it, and that's just been an extraordinary trade. So now with NAB up above $31, the selling's unbelievable, 85% plus sell on NAB. I think it was over a 90% sell the other day.
Incredible.
Just because why wouldn't you take some profits at this point? And also they've seen NAB above that level and fall back away before. So they've taken the opportunity to lock that in, and CBA at $107, that was a 90+% sell. So it's mostly trimming at this level. They're pretty keen to lock in those numbers and just see if they can.
And it's always nice to put some more dollars back in the bank account. Let's go to the other end then, the miners. So much happening in this commodity space at the moment, Gemma, across the board. We're going to speak to a couple of experts later this hour or next hour. But in terms of what's happening on nabtrade's retail platform, is there a particular commodity, a particular company? Is there something special going on there? Or is it generally a macro play saying, hey, it's all about commodities right now. We don't almost care what it is, we just want more commodities exposure.
It is a long list of mining companies. Like, it's a long list, and it's from the highly speculative battery metals, I think I've heard of what they do, kind of space, right through to BHP every single day. Fortescue's the big one for us. I mention it every week. It's very boring. It's a small number of very high value traders who know this stock inside out. It's an obvious play, right? You can see the iron ore price overnight. You know what the stock's going to do. You trade it. That's what happens. They do it every day. They've been doing it for a year and a half. They're making a lot of money, and they're going to keep doing it till they stop making a lot of money. That one's very specific, I think, to our platform. Not everybody sees that particular behaviour, but the BHP and the Rio, they're absolutely trimming at this price. They're kind of pretty happy with where it is, and BHP, huge buy at $35 not so long ago. So at the moment they're like, happy days, done very nicely, I'll just lock in a bit of that. Rio's a bit the same, and then if it's got lithium in the title anywhere, it's definitely in. Pilbara Minerals, they weren't specific enough, but still getting some excitement. People obviously have read a little bit beyond what the name is, and they're buying that. Core Lithium and Pilbara are both just massively traded at the moment, so there's no clear trend, but the volumes are huge, and then this long list of other stuff.
I was going to ask you about trading volumes. We've seen so much volatility on international markets, global markets, and here in Australia. That tends to come with it more trading volume because people are trying to work out what trade they should be on, and particularly for those short-term traders, the gain or the flip between gains and losses means you want to be positioning yourself. Are you seeing that sort of trend with your platform?
So volumes are up, number of traders is down. And I find this super interesting. So January, there was a fair bit of buy the dip, it's exciting, I know what I'm doing here, I've done this before. Now it's like, I don't know what I'm doing, I've gone to the sidelines if it's a younger, newer investor. This is just a far more choppy, uncertain time for those guys. These are the people who made an absolute killing in COVID, but that's their only experience of markets. If that's your only experience of markets, something like this where it can move 1.5% in a day, several days in a row, that's much less comforting for you. And so those guys have really drifted away, which I don't think is a problem, right? I think it's actually best they are watching. Let's observe, let's see what's happening. They're not selling, they're not just chucking it all in and going, oh God, I'm going to go to cash, it's too scary. They're just watching, whereas our older, more mature investors, they're not active traders per se, and it is really interestingly less individuals, more companies, trusts and self-managed super funds. And they're the big accounts and they're the people who've done this before. They're moving and they're moving big dollars around. So the average trade size is much higher than it has been over the last 2 years. It's really lifted, and it's people who've done this before and they're just repositioning, they're just watching what's happening. It is all in the mining space, and they've played BHP many times before. They know what Rio does. You know, it's a bit more experience showing really clearly at the moment. Woodside's the other one. I find Woodside really interesting. It's top 20, which surprised me. Definitely not held by younger, newer investors. Definitely held by self-managed super funds. So those guys have been trimming a little bit, even though the price is doing what it's doing. They're like, oh, just lock in a bit of that.
Now take me back to financials for a second, because I believe Macquarie Group's also been featuring in some of your trading activity recently. Not a lot of big news that I've seen, but maybe an opportunity that investors are finding either to buy or sell. What's going on there?
Yeah, it's a buy at the moment. And this is quite surprising because our guys love a bargain. And there is no definition of Macquarie that says bargain pretty much ever, unless you bought it in the GFC. You know, that $16 mark was great. Since then, it's been too rich for our guys. So Macquarie, CSL and Fortescue, up until about 2 years ago, were our high conviction stocks. They were held by less than 10% of the base. So a really small number of people, but they held like $150,000 each on average. Like the amount they held was massive, mostly because the price had gone like that. And Macquarie now, though, has become a stock that more people will buy, even though it regularly touches $200. That's quite unusual for our guys. A
flight to quality. Do you have a sense of kind of, is it coming with other things? Is it a sense of, as you say, you mentioned CSL Macquarie in particular. These have been long-term, as you say, not necessarily widely held, but amongst those who, the true believers, if I can call them that, just love the heck out of these things because they've been such quality businesses for so long. I've got to say, like that, like some of your shareholders, some of your traders, Macquarie is one of those businesses that you think, I don't really know what it's going to do, but I know that it's a high quality business. I know every single person there is there to make money for themselves and for the company. It's a pretty good combination of, you think, if you're investing in the assets and their people and they're super incentivized, I guess I can imagine why people might say, particularly in this sort of market, I don't know what's going on. Where can I find quality? It makes some sense to me, I guess, that Macquarie is part of that group.
It is a really interesting one. It's quite anomalous to what we would ordinarily see in our base. You know, it's not the kind of behaviour we see where they go, I'm just going to go and buy something super expensive that's done really well for a really long time just because I can. They don't tend to do that. They're like, oh, that got bidden up, I'm just going to go and buy it. Let's see what happens. So it's unusual. I think there is that long history. The consistent performance post GFC has been amazing, and so for our guys that's really appealing. I think also that history of a big outperformance post results tends to, you know, they always under promise and over deliver. People are aware of that now, so maybe that's attracting people, and they're like, you know what, maybe I need to have a little bit of that in there now. Maybe few less milk stocks, few less buy now, pay later. All of those are gone. I don't care about that anymore. Maybe I need a bit of upside in something like Macquarie, but it might also be the infrastructure play. That's the other one that we think might be part of it.
Fascinating. Well, that's the thing, right? We talk about the great rotation. I think it's a term that's probably overused a little bit, but it's also true. You talk about the milk stocks. There was a time when they were the only thing people wanted to talk about. We're past that now, as you say. It seems like infrastructure or interest rate exposure is kind of one of the big themes. Is that something that's coming through with some of the other companies that your traders are buying?
Yeah, that's such a good question, because there is this really, you know, you get the themes that everybody's excited about. Buy now, pay later was just so hot, and before that it was milk. It was so hot, and everyone was all over it. Now lithium is so hot, and it's hard to see whether that's a commodities play or just a super hot, sexy stock. Kind of thing. Which one is it that's driving it? And it's probably a bit of both, because we do see it from across the base. Like we will see self-managed super funds picking up some of this stuff. It's not just 25-year-olds on a hot stock kind of thing. So we see a bit of both. In terms of the flight to quality, the value rotation, all that kind of stuff, the one that we have seen is Berkshire Hathaway.
Oh, right.
That's popped back in. And if you want a true value play that is known as a true value play, seeing that pop in is you couldn't get a more obvious indicator, although it is unusual again for our guys to go offshore to get something like that. So the banks are clearly a value play, but they're selling those or trimming them at these prices. And there has been this little shift in interest in infrastructure. Berkshire Hathaway might be the other one. I don't know what else we would see in our base, which is I'm clearly hanging on to this because it's going to make it through a period of stagflation, for example.
Yeah. Last question for you. US stocks, you mentioned Berkshire Hathaway. I'm glad you mentioned it. I own some shares, I should disclose. What else are you seeing in the US market? What are your traders really paying attention to? What's being bought and sold in the US?
Yeah, it's so different to what we see in Australia, so it's fun. And it's quite interesting to see how well people understand international markets. It's so different to 10 years ago, right? When people didn't have the faintest idea. Now people are really, really well aware. The one that is really surprising me is Alibaba.
Oh, okay.
It was in our top 10 most bought international stocks 3 years ago. Tencent was the same. They were kind of getting onto this China play. Didn't necessarily play out super well. Let's be honest, it's been really complex to read what the regulatory risk is for some of those companies now. What I'm finding at the moment is we're seeing trades on the US that completely conflict the trades in Hong Kong. So we will see selling in the US and buying in Hong Kong, completely different trade sizes, completely different groups of people. So quite fascinating. There are totally divergent views in the base of what that stock is going to do, and they're going to buy it in different places as well. That's quite fascinating. But there are clearly those people who do feel that it will have bottomed out, and maybe there's some upside there, or that maybe Chinese government's going to go, we should let these guys run for a bit because they've had an awful time, and we would like to support that area. I don't know, but it's very interesting to see how they're trading the two.
It's a fascinating time to be a trader. Gemma Dale from NAB Trade, thank you very much for joining us.
Great to see you.